No, Tez. Want to trace the icon? Out.
Hi. File a simple return for free, now with advice from a TurboTax Live expert.
Writing's not that easy, but Grammarly can help. This sentence is grammatically correct.
And so for me, tilt is just another word for saying anger. for a lot of poker players, they'll say, tilt is anything, as I said, less than playing your best. But what if you're drunk? What if you're tired? What if you're fearful? All of those reasons are going to need unique solutions to them. So, anger is really the biggest one. In trading, I would call the equivalent greed and fear, and maybe to a lesser degree, loss of discipline. They tend to be the words that traders use most often to describe their mental game issues, when I don't think that they're actually experiencing greed nor fear or a lack of discipline, that it's something more than that. But within poker, what I did was break down 7 different types of tilt, or 7 different types of anger that would exist. One was running bad tilt, which meant, players were losing for several days in a row, sometimes weeks or months, and they were, just getting crazed as a result of it. And the solution to running bad tilt has to do with the understanding that emotion accumulates over time. Okay, the brain has a mechanism by which it can, in essence, digest emotion. Right, so you have a stressful day, you got angry one day, and so you go to bed not in the greatest of moods, but you wake up the next morning, you feel fine. Right, nothing bothering you. You feel it's like a normal day. Well, where did the emotion go? Right, in essence, the brain has like a stomach that digests the emotion, much like it would the actual stomach digests food. But what happens is when there's like a really emotional day, or then you might go to bed and your sleep might even be disrupted, in part because your brain is digesting all that. And then when you wake up the next morning, you don't feel quite right. It's almost like an emotional hangover, so to speak. And so when you start that trading day, or the poker player, goes down and sits to play poker again, they're not starting with like an empty cup in a sense, right? Their tilt threshold, their threshold by which the anger is going to affect their decision making has been lowered, right? Or their emotional level has already risen, however you want to think about it. And so in essence, it's going to take less tilt-inducing stuff to get them pissed off to the point where they're going to make bad decisions. So dealing with that accumulated emotion becomes really, really important. And so for traders who have this particular issue, one of the best ways that you can start to break apart that accumulated emotion is to do some journaling, is to write. And the writing, the purpose of it, first and foremost, is to get out of your head what those emotions are. Right? You go have a couple beers at the end of the day, right? You're going to feel better, right? But are you going to actually get rid of the emotion? Probably not, right? So venting to other people, has a way of getting the emotion out, but it's also not as productive. So keeping things inside is not a great thing. When you vent on paper, what you do is you give yourself a record of the emotional reactions that are occurring, and that becomes helpful when you go back and look at it a day or two later and you see, like, what the hell is going on here? Why am I getting so pissed off? And that's an important question to ask, regardless of the mental game issue that you're dealing with. In particular, we're talking about tilt. Why is it that I'm getting so pissed off here? Is it because I just can't deal with losing this many days in a row? And so then you're able to start to solve things. But at a minimum, you can start to deal with running bad by just getting that emotion out and minimize the accumulation day by day so that you can give yourself a chance to kind of reset. The next type of tilt I talk about is called hate losing tilt. I should have actually called it competitive tilt in retrospect, because like traders, poker players, you're going to lose a lot, right? And for people who are competitive, especially those who are athletes or were in any kind of forms of competition earlier in their life, they have more control in those other avenues. They've been more successful. And so they have more control over winning and losing. So not only do they hate losing, but now they've entered a profession where losing is built into the fabric of it, and it just pisses them off. There's no way around it, right? There's a lot of competition. Well, what you have to do there is have to really start to understand exactly what it is that you're competing for. And that's how you can start to correct it and reframe the nature of the competition, right? And so, you can look at your goals as being something that you're competing for. Sometimes confidence or good feelings, emotions, you're competing for. And when you start to understand exactly what the nature of the competition is, you can start to round out some of the edges that will create those problems. Injustice tilt, entitlement tilt are two ones that I've mentioned already today. Mistake tilt, revenge tilt. Kind of always a fun one. In poker, that would be a particular player is just constantly beating you, or they say something or do something that kind of just annoys you, and then they beat you, or a particular player who has just gotten the best of you, time after time after time, and they, now just hearing that person's name gets you pissed off. As I mentioned, right, trading is a little bit less personalized than poker is, but revenge trading definitely exists, in a way of trying to get the market back for screwing you, right? So it may be less about a person and more about getting the entire market back. And then the last one is called Desperation Tilt. And this is where I would say there's a line drawn between a performance issue, right, versus an actual gambling problem. And this is a very important distinction to make for some traders and poker players to make, right? A performance issue means that what you're doing, let me describe first. So Desperation Tilt basically means that when you are so desperate to recapture your losses that you'll pretty much do anything, right? You're going to increase your bet sizing. You're going to enter trades that you're going to start placing bets in industries or in names that you don't even know anything about, right? It becomes more pure gambling in a sense. That desperation to win overrides all logic, and you do a lot of stupid shit that you're regretful of, the next day or even later in that day. When it's a performance issue, you can handle those losses. You can handle all the dumb stuff you've done. When it's a gambling issue, now you're betting with life savings. Now you're betting with money that you borrowed from friends. Now your life is becoming impaired, and that's where you've got to really look in the mirror and say, do I actually have skill in this game, or am I just a degenerate gambler? And fortunately, most of my clients have been in the former category where it's a performance issue and we are able to correct it. But if somebody has, a gambling problem, like I mentioned, I refer them to somebody locally because it's not something that I work on.
Now, I'd like to share with you what I think is a pretty fascinating segment from Michael Samuels on episode 165. Michael's an equities guy with a prop trading background who now predominantly trades news flow around mergers and acquisitions and other major events. Can you tell us a little bit about this situation with Qualcomm? And I can't remember who the other company you mentioned was. You said this deal's kind of falling apart at the moment. I mean, how are you trading around that?
One of the mistakes that I've made is I'll call it the cost of time being sunk in, or time sunk cost. The more time that I put into something, and the more money I invest in it, the more research I do with it, the harder it is for me to change my mind on it, if that makes any sense. So the short story in this, again, this is 19 months that I'm going to try to sum up in 2 minutes. The short story is Qualcomm tried to buy this company, NXPI. They needed 9 different countries to approve this deal. 8 of the 9 countries agreed, and 1 country did not, and that was China. And what ended up happening was it got very wound up and wrapped up in all sorts of different international conflicts that are currently happening between the United States and China and Trump and and Chairman Xi. And I have found myself at points, head spinning over this thing, and I've gone to drastic measures to try and gain an edge in this, and the only result has been that it's just made me crazy. And, if you want to, I can tell you about some of these drastic measures.
Sure, yeah.
So, and again, you have to stay within the confines of legality, right? So there was a point in this story where the Wall Street Journal broke a story that said that Qualcomm executives were waiting for the 10-4 from China to fly over there and finalize the deal. So in my mind at that point, the signal that I wanted to see was the Qualcomm plane taking off from San Diego, California, and going to China. And now there's various services that track these sort of private planes. But in this case, that wasn't possible. And the reason that wasn't possible was because Qualcomm themselves blocks the tail number on their plane. So the next thing the only other option you have then at this point is, and again, this was a story that I had made up in my head, was that the only way to track this plane is to physically be out there in San Diego and watch it take off. And so I literally just posted we have something called TaskRabbit. I don't know if you guys have that there, but
We've got something similar, yeah.
Okay, so I posted something on TaskRabbit, and the TaskRabbit post read something like, go to this airport and watch this plane take off and send me a video of it. And I got a response in about 15 seconds. And this woman who was, just a mother of three, she would drop her kids off at school, and she would go to the airport, and she sat there at the airport for me day after day after day after day. And she was probably there for like a week. And I had to deal with her, and the deal was this. I'm going to pay you X, this much a day, and if you get a video of this plane taking off, I'll give you this bonus money, this big bonus money. And she calls me a week later, and she says, it's happening. And, you're probably wondering, well, how did I know where the plane was going, right? That's the big question. I have this plane. How would I know? And the thing is, you don't. But the way that, and again, I was making a lot of this up, perhaps, Qualcomm has two planes. One is for short distances and one is for long distances. And so I was tracking the big one, and the big one took off, and she sent me a video of this. And of course, she sent me the video of this at like 3:45 on a Friday, where I have 15 minutes to make up my mind of what I want to do with this situation. And, that's the kind of stuff that can make you crazy. And because you think you have this piece of information that no one has, you think, well, what if it happens this weekend and I don't take advantage of it? So I had better do that now. And not only that, but I was so mentally wrapped up in this thing. I was so emotionally committed to it, like it was a person, this trade, that I wasn't thinking rationally. And of course, I ended up putting on a large position. The deal is still not happening. And, it's probably taken a few years off my life just watching this situation unfold.
Right, man, that's a crazy story. Have you done things like that in the past? Like other situations where you've kind of done some, I don't know, stakeouts?
Excessive due diligence?
Yeah, let's call it that.
Nothing to that extreme.
Okay.
Nothing to that extreme. I mean, a lot of this job, in my opinion, is, you could call it getting lucky, but you have to be on these conference calls. You have to be in the game. Don't be lazy. One of the best trades I ever had, I happened to be a bit lucky, but I happened to be on this Lumber Liquidators, which is sort of like a lumber supply company, conference call in 2014 or 2015. And they happened to mention in the call for, at complete random, that they were going to be on a show called 60 Minutes, which is an investigative journalism show that Sunday. And it was like, a grenade went off in the middle of this call. And one of the analysts, it was an earnings conference call. Suddenly no one cares about the earnings. And they said, well, what's the deal? Well, why are you going to be on 60 Minutes? And he said, well, I can't really describe, the contents of it, but I will say this. I stand by the safety of our wood, which implies, oh shit, well, the whole segment's going to be that the wood's not safe. And you probably had 5 to 6 minutes before this hit, the Bloomberg wires and all the major news wires. And, in trading, that's an eternity. 5 or 6 minutes is an eternity. And, I did great in it, but you look back and you say, well, man, I could have done this, or I could have done that. But I guess what I'm trying to say is one of the things to always remember is just don't sit on your hands, get in there, be on every call that you can get on, just be there.
So when you got that information, how did you actually build a trade around that? Did you just instantly go short the stock, or was there something more to it?
In that situation, and again, I've replayed this in my head, oh, I should have done this or I should have done that. I mean, at that point, the stock was trading for 69. You could have shorted it all you wanted down to, let's say, there was unlimited amount of liquidity in this name till 65. And at that point, I think it was still like maybe down small on the day. And just so you know, on Monday after that segment, the stock opened at 30. So,
Wow.
There's lots of things I could have done. I could have bought puts that were going to expire the following Friday and, before the vol and the puts had exploded. There was lots of things I could have done. What I did was just short the stock outright because in the moment, when it's happening, you just think, what's the easiest way for me to get exposure?
This following clip was recorded at a live event which aired on episode 163 with the legend John Moulton, best known as Rambo, a nickname and reputation he earned while throwing around huge volume as a spread trader in the pits of the Sydney Futures Exchange. Let's go back to the point you made where you spoke about how it's important to lose. It sounds like you've got a few things you want to say about that, so let's hear it.
Well, it's just my observation the last couple of years of my life that a society in general doesn't really teach people how to lose. They teach you how to win. Winning is easy. Everybody knows how to win. They see LeBron James win a basketball game, making the last shot.
Yeah, I tried calling
He knows how to win. He's a winner.
I forget.
Winning is easy.
Like 2 to 3
but is there
times
anything in society that teaches you how to lose? Is there a course at university you take that says, hey, come take this course, we're going to teach you how to lose? In general, there is one thing that will teach you how to lose, and that's organized sport. Because in organized sport, you will lose. Okay? That's the only thing I can think of that teaches you how to lose. Other than that, you have to figure it out for yourself. You really do. And losing and how you deal with losing is extremely important in trading. Because winning, I'm telling you, is easy. That's easy. It takes care of itself.
So for Alex,
the key to trading is learning and figuring out how to take a loss and how you deal with that up here. Do you hang on to it and let it bother you?
Okay.
Or do you release it and let it go?
Okay.
All I can say is that you need to learn from when you're trading. You have to learn.
3 leads that I got,
and you can learn from them from being correct and say, "I did that correct," and you learn from that. And you can also learn from when you lose. And when you lose, you have
all 3 of them.
Experience the loss,
tried to contact
feel
at
it,
least 3 or 4 times.
learn from it,
I was
and spit it out and let it go. And focus on the next trade. If you hang on to a loss too long, it will pollute you. It will not allow you to make the next trade, and you have to focus always on the next trade. The next trade is the most important trade in the world. Not the last trade, or the trade before that, or the trade before that. Just let the trades happen and focus on the now of trading.
So how do we...
Do you have the belief that each trade is individual of itself? Like there might be times where you're actually going through a rough period. Do you still treat every
Why are you so
trade?
negative?
I'm not, but we're
Rough
talking
period?
about losing here. It's,
No, that's true. I mean, the way I've always traded, I don't want to use the word high frequency because you guys have algorithms that are high frequency trading algorithms, and I'm more of a hands-on trader. And what I'm always doing is I'm focusing on the next trade. I don't think about the trade before it. And I'm not analyzing the risk I just took with that previous trade. It's just a fucking trade. I don't care. It's just put it in the books. Let's get on to the next trade. And because I'm mainly a spread trader, so I'm buying here and I'm selling here, I'm trading 20 different things all the time on the bid and offer, blah, blah, blah. A lot of times I have no idea what I'm doing. I'm just trying to make good trades. And then the market closes and I go, I wonder what my position is. Let's look at that position calculator. I look at the position and go, well, okay, I'll get that up on the chart. I'll get that up on the charts and see if that looks good. Oh yeah, it looks good on the charts. I like that position. I might keep that for a day or two. What motivates me to make trades is when I'm looking at the markets is a lot of different things. It has to do with relative value.
So, for example,
it has to do, is there a buy program in the 10 years? Is there a sell program in the 10 years? Are these spreads reaching historical levels? Are we getting near expiration now? These spreads historically have a tendency to move a certain way going to expiration. So there's a lot I'm thinking about when I'm making trades.
So overall,
but I don't dwell on what I've done. I never dwell on what I've done.
What actual morphing is for other people that I'm.
when you're talking about learning how to lose, I mean, I know who here has been trading, let's say, less than 2 years?
Who's been trading for more than 10? Ooh, cool, young crowd. That's cool.
Yep, I was actually.
So I imagine, especially for newer traders, that's a very strange concept to put forward. learning how to lose. How would you actually know if you've learned how to lose?
Whatever work I'm doing, I literally
you stop doing
problem, I'm a workaholic. I like to work. I just
you don't lose as much and you lose less frequently.
Unless it's towards leads,
and then you
or
say to yourself, maybe I'm getting this now. Okay, but you're gonna lose. So I don't dwell. Once again, I'm repeating myself, but I'm so focused on the next trade. This is real Zen shit, man. This is like living in the now and spitting out what's happened in the past. If you're a Zen Buddhist, if any Zen Buddhist here, you'll make a fortune trading. So what you're trying to do here is you're trying to focus on the absolute moment of the price information that you're getting off the screen. And that's what you're focused on. And everything that's happened before that, you can look at it later.
On my side,
but in an active market, when you're trading, you want to be focused on the now of the price action that you're looking at.
Stuff like that.
And if you're dwelling on other things that have happened in the past, it's gonna keep you from doing that. It's as simple as that. As far as losing is concerned, I mean, like, when do you really actually realize that you've lost money? Well, it's when you get your statement the next day and you look at the total equity at the bottom and you say, fuck, I lost money yesterday. But I don't do that. I've gone months and months without looking at my statement to see if I made or lost any money. I've gone months with that. One of the things when I first started trading, like a lot of you guys are new traders, I had to keep track of how much money I was making on a daily basis. I used to go from Chicago on the Chicago Northwestern trade up to Lake Forest every day. It's about a 45 to an hour train ride, depending whether I'm taking the express train or not. And I'd sit down, I'd count every trade I made and figure out exactly how much money I made or lost on the day. I did that for a few years, right? So it's an evolutionary thing. When I first started trading, I really wanted to see how I was doing on a daily basis, right? It was important to me. Then I realized after a period of time that it wasn't so important. Then I got to a point where I said, actually, if I can completely divorce myself from money, I'm going to be a much better trader. I know that's hard to do, but I'm telling you now, if you can get away from the money aspect of trading and just focus on the market and making good trades, you'll be distracted by less things. There you go. I mean, I'm at a point now, and I have been for about 15, 20 years, where I just don't care about the money. I get a monthly statement now. I'll look at a monthly chart of where my equity's been, and that's it. I don't look at daily statements. I look at nothing. I'm focused on my position and the trades I want to make, the trades I'm making.
What are some of the lessons? I know this is a really cliche sort of thing to say, but given someone like yourself who's been doing this for 40 years, I think it might be an interesting subject to go into. What are some of the lessons which you would like to pass on to a younger group of traders?
Believe in yourself. Self-belief. Real big. Real big. Don't quit and never lose all your money. It's like a poker game. You lose all your money, you have to leave the room. Go away. Come back when you have some more money. So, yeah, and that's just very simplistic things to say, but it's really true. Stay in the game and really believe in yourself. It's a real balancing act between having too big of an ego and not having enough of an ego, and you got to know yourself really well. You got to know what your strengths are, and you have to know what your weaknesses are. And it's a real game of inner exploration up here. And I find it interesting now we're all trading from screens.
Even if you're on the
The screen's over there, and I'm here. You want to externalize the experience of trading? Real easy. The screen's over there, and I'm here. But you shouldn't be doing that. You should be internalizing the experience of what you see on that screen into here. Internalizing it. It's not you against the machine. The machine should be part of you, metaphorically. The one thing that I found and about trading, and it's the greatest gift that trading ever gave me, and it has nothing to do with money. It has to do with freedom up here. I knew early in my life I wasn't the type of person who was going to be told what to do. I realized I was going to have to find something that I could do for myself. I wasn't very good at taking orders or working for somebody. And initially, it was like, okay, to do that, I need to make some money on my own. I'll become a trader, okay? Down the track, and I made mistakes. I started, when I first got some money, I started buying stupid things. Then I realized that owning physical possessions was just going to be a burden to someone like myself. I'm no good. Can't look after things. I don't know how to change the oil. I can't do this. I can't do that. Owning physical possessions was a complete burden. So I stopped doing that. And then a little bit further down the track, I realized that the greatest thing that trading was going to do for me was freeing up my mind. Free me up here. I can look at any situation in my life and treat it honestly and fairly without having to accept anybody else's dogma being shoved down my throat. And I like that. I love having freedom up here. It's a really beautiful feeling, and I wouldn't trade it for the world. And that's what money's done for me. It's enhanced my my existence on a lot of different levels, and it has nothing to do with fast cars, fast women, or any of the other nonsense. I was watching the golf over the weekend, and they were at the Memorial Tournament in Ohio, and Jack Nicklaus was there giving a little speech. And I wrote down what he said, and he was, because I think golf is very similar to trading. So one sport that draws a lot of parallels to trading. And he said the following. He was talking about Hale Irwin, who was another golfer of his era, who was just receiving a big prize. And he said, Hale Irwin is a great manager of himself and the course. The analogy here is that a golf course is like the market. When you tee off on the first tee, what are you up against? Well, you're up against how are you going to swing the club? What are you thinking in your head? How am I going to play today? It's very internal. The course, how's the wind blowing? How fast are the greens? How thick is the rough? That's the marketplace. That's what you have to deal with. When a professional golfer tees off, he has to deal not only with himself, but the golf course. Every time you turn that machine on, you have to deal with yourself and you have to deal with the market. Very close parallels. Anyway, he said, Hale Irwin's a great manager of himself and the course. And then he just said this to anybody who wanted to hear it. He said, know who you are, know your game, play within yourself. I wrote it down because I said, fuck, this is trading. This is trading. You know what I mean? And he said, believe in yourself. And I've already said that to you guys. Believe in yourself. And another thing he said that I thought was very fascinating, he's talking on the TV. He said, and he's the greatest golfer ever. He's dominated the sport during his era. And he said, I never thought I was the best. I never thought I was the best. He said, if I ever started thinking that way, I was absolutely destined to screw up. Take a triple bogey, lose the tournament, not make the cut. So I never thought about being the best. To me, it was always the challenge to try to be the best. I thought that was interesting. I thought I'd pass that on to you guys.
Next are a few snippets from the 2 interviews I've done with Mike Bellafiore. See episodes 22 and 162. Mike is the co-founder of S&B Capital, a proprietary trading firm in New York City. What were some of the hurdles you had to cross, like things that you really struggled with early on?
Just edge. I think that lots of times people mistake psychology with a lack of edge. And people think, oh, there's something wrong with me. There's something wrong with my mind. I think a lot of times just people don't understand their edge and they don't have edge. And, look, if you make a trade and there's no edge in the trade, of course you're going to get upset because you're going to probably lose money. Whereas if you're in a trade where you have edge and you make money, you're not going to necessarily struggle with lots of the psychological issues because you're going to have made money. So I think that edge is hard. And I think people don't even understand how hard it really is. Great traders can barely be right more than 50% of the time and still be legendary traders.
Can we just go back and pick up on, I think it was the first part of that formula you described. You mentioned about having a growth mindset. Can you go into that a little more? What does a growth mindset mean? What's that referring to?
So there's a really great book that we recommend traders read before they actually show up at our firm. And it was written by Carol Dweck, who is a professor, and she wrote this book called Mindset. And really, really great book. And the book essentially, the hypothesis is that if you come into, I'll apply it to trading. If you come into trading and you think that your talent and your talent alone is going to dictate how you do as a trader. That's called a fixed mindset. If you come into trading and think, well, how I'm doing right now is how I'm doing right now, but I can be better tomorrow. And if I do ABC, then I can be a lot better. And that's a growth mindset. And we found at our firm that the traders who have a growth mindset become very, very successful traders. And a great example of that is at the end of the year, this year, we ask our traders to come up with their yearly goals. And in 2016, one of our traders, who I'm going to talk about their yearly goals in 2018 for, this particular trader earned a green shirt. And at our firm, if you net $1 million in trading profits for a year, you get a green shirt. It's a big honor to be able to hit this level. And in 2017, this trader earned a black shirt. And a black shirt is when a trader nets $2 million plus in trading profits for the year. And so a trader was very successful in 2016 and got even better in 2017. And when he sat down to come up with his yearly goals for 2017, he said, bigger picture, I'm also thinking about making the incremental steps to be a $10 million a year trader. That's what he wants to be. And so
Inflow still strong.
he's
No
not
reason why we can't push.
settling for being a black shirt trader. He is starting to think about the things that he needs to do and starting to do the work that he needs to do to hit that next level in his development. That's somebody who has a growth mindset.
Do you find that most people in trading naturally have what you would call a growth mindset?
No, absolutely not.
Really?
Yeah. I definitely think there are a lot of traders that have a growth mindset, but no, I don't think everyone has a growth mindset. I also think while it's preferable that people have a growth mindset, there are traders that are so talented that the fact that they don't have a growth mindset also doesn't stop them. But it's highly preferable.
Getting to a seven-figure trader, how much of it is a mindset factor? I know we spoke about having a growth mindset earlier, and that probably ties into this, but do you think that some people, they want to make $1 million, like they can say that, but psychologically perhaps doubt their own ability, or it seems too far beyond the realm of possibility? If that's the case, how do you overcome that?
So I've written about this in the past. I call it small wins. And so you don't want to think about going from $0 to $1 million. You want to think about going from 0 to being able to make $1,500 in a month. I actually would take a step back. When you first start trading, a very common step is you lose too much money. And a real step in progress is to lose less. It's a real step in progress. And a real step in progress is to trade flat. And a real step in progress is to make $1,500. And so after you make $1,500, you set the next goal. Maybe I want to make $4,000 in a month, and then maybe I want to make $10,000 in a month. And so you want to be thinking about what are the things you need to do to get to that next realistic step in your development. And it is a process. We find on our desk that it takes until year 3 before traders are going to make substantial P&L. And you want to come into this game being realistic about your learning curve. You can make some money in year 1 and you can make good money in year 2, but what we're seeing at our desk, guys have all these resources. They get to work with Dr. Steenbarger. They get the best technology in the prop space, both on the front end side, and you can't use our technology unless you trade at our firm. And on the automated side, and you get all the coaching and all the mentoring and plenty of capital to use at the firm. And it's still, and you have these experienced traders who you can learn from and watch them trade in real time, and it still takes some time to get good at it. And you get the firm backing to make sure you can support yourself through those years, but it still takes some time. So I don't think about trying to go from the 1 yard line to across the from the 20-yard line to all the way across the field to the other team's goal line. I think about, how do I go from the 20 to the 30? How do I get from the 30 to the 40? How do I get to the 30? And just keep plugging away and put your head down and keep working. And it's easy to get from the 20-yard line to the 30-yard line. It's really almost impossible to go from the 20-yard line to scoring a touchdown. So that's what our guys are doing. And that example that I used with one of our top traders who wants to be a $10 million a year trader, he was a 7-figure trader 2 years ago. Before that, he went from a 0 to a 4,000. I remember pushing him when he was about a $8,000 to $10,000 a month trader. I remember pushing him and challenging him to make $30,000 in a month, and getting him to get to that. And I remember him then doing that. And then he got to the point where he netted $1 million, and then he got to the point where he netted over $2 million, and now he's pushing himself to make even more. But he's taking those incremental steps, and to be a $10 million a year trader, he knows he has to take these incremental steps. And so focus on those incremental steps that you need to take to get to that next level.
Coming up now, a clip from episode 174 with Nishant Purbandawala. Nish is a proprietary trader at Kirshner Trading Group in Austin, Texas. Now, this clip is an awesome comeback story, and it plays in perfectly with the psychological challenges associated with trading.
The story I was telling you that, I should tell everyone is the story in 2014. And it was a great year for me to start with. I was up, I think I was up 300,000 in the first 3 months. And it was a great start to the year, and I was really happy. I was having my first child, and my wife was like, "Oh, we need to buy a stroller." I said, "Yeah, buy the best stroller." And I was like, "We need to buy this and buy the best. Listen, it's going to be a good year. Looks great." And then I was playing an imbalanced trade, just like I normally do, but for some reason I didn't get my closing print on it. So I was in 10,000 AMGN, and I was short 10,000 AMGN, which I was supposed to cover at the close, and something happened and I couldn't cover it. And I was Allegren, sorry, yeah. And I couldn't cover it. And while I was trying to get out post-market, Ackman came and said that he wants to buy the stock for $150 or $140 a share. And the stock was trading that time at about $90. And so it took me less than, I think, in 30 seconds, I was down 300,000 in the stock.
Shit.
Yeah, it was crazy. I was just sitting at home and trading, and basically I lost everything I made for that year. And I mean, just the loss itself was really hard psychologically. I just had a child. It was just, I think it was 15 days after that, and I just couldn't believe what happened. I was still in a daze. I think when I came down, I thought of quitting trading, because I was like, I don't know if I could ever come back from a loss that big, or how long would it take? It was just like, my whole life was like coming in front of me, and I was just like, I don't know what to do at that moment. It was a tough time. I was pretty much in tears. I called my old coach, and he kind of told me, he's like, no, just stick in there, just don't worry about it, just just hang in there. And I was like, okay, fine, you know what, this is the reason I started trading is because I love trading and it's for the passion of trading, because this is what I would do every day of my life if I had a chance. If I would work on weekends if there was a short of trading on weekends. So I said, you know what, let's just go back to the love of trading and forget everything else. And I started trying to make a small comeback. I think I remember the next month I lost $15,000 because I was just not there mentally. Then slowly, I think I started making. I think made like $5,000 and $10,000 and $7,000, $10,000. Kind of slowly started chipping in on that loss, and then I think in about 3 or 4 months, I found out my father had cancer, so I had to go back to India. So I went 3 or 4 times to India, and I was like, dude, what else can the world throw at me now? It's like this loss. I just had a child, my first child. My father had cancer, so he passed away in December, and by that time, I was still flying in and out of Austin to Bombay. So I didn't have enough time to even trade properly. I was still, so much happening at that moment. So I kind of, I think by the end of the year, I think this loss happened in April, and by December, I think I had covered about half my loss. I was down still 150 for the year. Didn't make a paycheck, nothing. And then comes 2015. So I think it was 24th. Or 21st of August. So yeah, 21st of August is when I finished my loss of 150,000. So that's when I covered all my losses, and then 24th is when the flash crash happened.
Oh, right. Okay.
So you can imagine the emotions that I was going through at that moment in life, because I had this crazy loss. It took me about 1.5 years to recover. And I just recovered about 3 days before the biggest day in my life.
That's crazy.